So it's not trying to be a jack of all, it's actually being a master of the specific thing that you want out of it. I think that's really what term insurance really does.
When you're buying a house, probably the biggest financial kharcha, and you're not considering the fact that if something were to happen to you, God forbid, that's a massive amount of money.
To give flexibility to the person of how he wants or he or she wants to plan the life. The life cover increases when you get married. The life cover increases when you get your first kid. The life cover increases when you get your second kid.
I want stuff that feels secure, helps my sleep score.
Have you noticed how everything around us is changing at lightning speed? The way we shop, the way we work, the way we plan our lives. From instant deliveries to digital payments to flexible careers, everything around us and our own daily habits are evolving faster than ever before. And with this shift comes a bigger question. How do we protect our families in a world that refuses to slow down? The idea of security has taken on a whole new meaning. And that's what today's episode is all about. Navigating this brave new world and understanding why financial protection isn't just a safety net anymore, it's a foundation. A foundation that gives your family the confidence to dream boldly, no matter what life brings. Let's dive in. Hello, I'm your host Anupam Gupta and I welcome you to the Liberating Mindset Podcast brought to you by SBI Life. I am thrilled to be joined by Mr. Abhijit Gulanikar, President Business Strategy, SBI Life, and Varun Duggirala, entrepreneur, best-selling author and founder of Emomi, a company helping kids and parents build real-world skills through stories and play. So today, we are diving into something I am personally fascinated by, how young Indians are dreaming bigger and bolder than ever before. Whether it's starting their dream business, traveling the world, achieving financial freedom early, or creating something meaningful, there's this incredible energy I'm seeing across millennials, Gen Z, and younger folks. Varun, what do you think?
I think it's a mindset shift, right? If you think back on the time when I was in my 20s and in that phase, I remember that it was always working towards a point when you get to your 50s and 60s so that you can find balance then. But what I've actually seen now is someone who's young in their 20s or even early 30s is saying balance is not an end result. It's how I want to live my life and it's something I work towards on a daily basis. I think that shift has just changed not just how you live, but how you look at things you invest into, how you want to spend your time, and how you kind of plan your life in general.
Abhijit, what do you think?
No, it's fascinating. And one of the great things that has happened is democratization of all the info and all. So there are no longer any gatekeepers. Anybody who has ambition, creativity, has access to all the tools he or she needs to meet her or her goals. That is fascinating, absolutely.
Something that all three of us didn't have when we were at the age that the current generation is, I guess.
Correct.
Okay, everyone says we live in uncertain times, but honestly, the kind of career jumps and lifestyle leaps I see now, was it like this when I was growing up? Varun, what are you seeing among your audience? What's driving their ambitions and their worries?
I feel people want to experience more of life. So you're looking at like a young person today will choose a travel experience or any form of experience at least 3 times a year. They look forward to a scenario where I want to make sure my health is in the right place. Even talks about sleep score.
Abhijit, what are the latest trends that SBI Life is seeing on this front?
So life cover was a nascent product in India for many, many years. But in last 4-5 years, it has picked up a lot. You see, earlier in the age 35 plus, and now we are seeing younger and younger folks wanting to evaluate the need for term insurance. And that is the new thing that we are seeing in our life insurance industry in terms of how people are looking at financial freedom through buying peace of mind through a life cover.
Whereas I guess for us from our generation, we used to buy life insurance. That's probably the first insurance product.
Correct.
Or first financial product after a bank account.
Yes,
you
absolutely.
Just take a life insurance and then that's it.
Correct.
Right?
Because some friendly neighborhood guy would come and meet you.
Peddle it and then we have to buy it and
Correct.
pressure from our parents maybe.
Yeah.
So that's a great segue to our conversation today, right? We're going to explore how people are balancing ambitious dreams with practical realities, especially in these uncertain times. So this is something I'm genuinely curious about. I mean, what are the industry trends that you're seeing in terms of perception among the younger, the youth?
So surveys we have done, obviously today's younger generation is doing startups from colleges. They are taking all sides of profession, which we never thought of, doing at all. and their confidence level, ability to execute their dreams are much higher than what I have seen in the past. What we have also seen is obviously change in investment preferences for them. And the surveys we have done shows that the 18 to 21-year-old is more comfortable investing in equity markets and prefers them over other investments like FDs and all, which is a change from maybe generation ago of the investors.
Very interesting. Varun, you've got this massive following of people in their 20s and their 30s. So when you post about investments, mutual funds, credit cards, there's engagement, right? Insurance. What's your experience? How do people react?
Insurance was not a conversation point for especially this younger generation, right? Because it didn't feel like the flashy object. People gravitate towards flashier investment opportunities, etc. But the more and more I'm seeing a young person today, they're also realizing that there are two parts of how you build financial stability for yourself. One is the stuff that you're looking at from a flashier point, but the more important aspect is what's foundational. What helps you sleep better at night. What is not going to be volatile in that sense, because we live in a volatile world. We live in a world where things are changing every single day. There's disruptions all around, and so a young person today is saying, okay, one second. On one end, I want to obviously look at investments which are moving and moving with the times. But there's also, I want the foundational stuff to also move with the times in a way that is built for me. And that's a very interesting conversation point that's happening lately, is the fact that I want stuff that feels secure, helps my sleep score, like I like to say.
So before we dive into specifics, again, question for both of you. I've always been confused about this. Why term insurance over, say, mutual funds or ULIPs, right? Varun, you've probably researched this extensively. I've realized that's what dads do. Okay, so I'll repeat the question again. Why term insurance cover over mutual funds or ULIPs?
I learned this the hard way.
Okay.
We were talking earlier about the fact that when you're younger, one of the first financial products you buy is an insurance. And that would always be one of those pieces which is trying to do all things, right? It's also, on one point, it's an insurance, it's also savings, it's also showing some amount of, it's an investment, it's doing all that stuff together. And if you look at a term insurance, what I have actually found, as I've had now 2 kids now, and like we said, dad mode comes on, is that it's doing the job that an insurance is supposed to do. You're not overpaying on premium. It's focused on the insurance aspect. It's getting you the coverage that you need. And I think that is also giving the result you want mentally as well. It's making you feel secure on the aspect it's actually supposed to deliver on. So it's not trying to be a jack of all. It's actually being a master of the specific thing that you want out of it. I think that's really what term insurance really does.
Abhijit, as a product manufacturer, what's your perspective on this?
So we would be, like to offer all products, which are a mix of insurance and this. But like Varun said earlier, you need to have your foundational pieces in place first, correct? Before you evolve into any other product. And term insurance or medical insurance is the foundational product in any financial planning. So before, especially when you start a family, for a single guy, maybe, you can think about term insurance later. But once you start family and you're responsible for somebody other than yourself, term insurance is absolutely must. It's easy to do. When you are younger, medical underwriting and all is much cheaper. Prices are much cheaper. And you have products which, can be flexible and be with you, and they can grow with you as your income increases. But to fix the big, like they say, the big blocks of planning first, term insurance will be, one of the first things that you should do.
So let's actually make this practical for our audience out there who want to know more about this. Tell us about the variants. Tell us about the types of insurance products that you have that cover the entire life. Like you said, for someone who's just started earning, grows, has a family. So what are the products there?
So if I were to bucket it very, quickly, so term insurance is the foundational product which will cover and, provide funds when there are, uncontingencies in life. And that is very important. On the other end of the spectrum, which is also one of the small base but the fastest growing demographics in India, is people who are 55, 60 plus and growing 60. And there is no social security in India. So you need financial annuity is one of the other important, that you get money for life. So that is the other end of the spectrum, correct? So that is risk of living too long. That is being covered by annuity. Risk of living too short is covered by term insurance. Then you have financial goals. You want to plan for your retirement. You want to plan for your child's education. you have certain other financial goals in mind, and there you have, and then say for example take an education policy, right? You need to say that my child, and these days education is becoming prohibitive expensive.
Yeah.
So I need to provide money for that. Now unfortunately, if something happens to you, then there is not enough saving going in to meet that goal. So when you have a combo child product where the savings is happening, at the same time life cover is getting offered just in case the unfortunate death of the breadwinner happens. So you have all products in between, which meet financial goals. And obviously in those products you have many other financial products which will meet the same goal of the customer. So it's a combination of those and in a healthy way based on what is the risk appetite and how to say risk awareness of the person, you would want to offer products to the customer.
I find that really interesting because you're saying that, if someone starts at say 25, okay, which is when, let's assume that you've done your graduation, probably a post-grad, you start your job, you get life insurance, and that's very important because as you grow, someone is dependent on you. God forbid, if anything happens, the income is replaced. That's basic term life insurance. You grow older, you have kids, you buy a house, there is something there for that also. Let's bring this to financial planning, Varun, because if you move away from the static view of insurance, how do you think this would have changed your own financial planning journey?
I think it would have changed a lot because what you always thought was insurance is something that you buy once and then you just kind of continue with that, but you don't realize that as you kind of grow and you add in family, you add in, you add in kids, the size of your house will increase as your career kind of progresses. You might go from I think for me the point is that how much do you pay on rent versus how much do you end up paying on EMI when you buy a house?
Always
how much is the first car you own to the car you come to, but somehow the insurance never really changes for how you are changing, not just you and your lifestyle, but also like your family, what you want to do. Are you taking one holiday a year? Do you want to take your family for a few more experiences? So it all has to be built around that.
Benefits that insurance offers, right? One of my favorites are the riders, right? For the longest time, I didn't even know they exist.
Correct.
And now I think over the last 5-10 years, the industry has also brought in a lot of them.
Correct.
Okay, so first, Abhijit, let's start with what exactly are riders within your policy that people might not know, one also might not know.
Correct.
We'll come to that. What additional protection do they offer?
So, I would come to one of the reasons people die young in India. The biggest reason actually, unfortunately, the road accidents. We are not a very safe country on the roads. And accident rider is one of the easiest riders to get. So what happens is you have say 1 crore life cover, which covers all kinds of deaths. Doesn't matter. You can, for a very small amount, buy another 50 lakhs or 1 crore, depending of accidental rider. So if something happens because of accident, you will get 1 crore plus that 50 lakhs, so 1.5 crores for very small amount. So that is one rider you have. The other riders, and I will give two examples. Other is partial disability riders. Again, same thing. Unfortunately, in road accident, you lose a limb, you lose the eye, and that's not a very happy situation. There are chances that your earning capacity will decrease. In very extreme cases, you may not be able to work also. And that doesn't happen with so what happens is there is a formula, IRDA based formula of what compensation of the amount. So in those accident benefits disability, you will get part of that 50 lakh amount also as a compensation for you, even if the death doesn't happen. So those are the kind of riders which are useful. For a very small amount of premium, you get additional protection.
Yeah, and I want the audience to understand why is it a small amount of premium, because as I mentioned before, it's probability based.
Correct.
Life insurance is priced very differently.
Correct.
Riders are priced very differently.
Absolutely.
Yeah, so I have seen that myself because when I took up a personal accident cover, I was like, "Arey, ye kya?" I'm getting like 1 crore of personal accident cover at a very nominal cost.
Absolutely.
I'm assuming that there's some statistics to play in
Yes,
that.
absolutely.
Yeah.
And it is not age based.
Yeah, and it's not age based, correct? Because accidents can happen too. Varun?
You mentioned age based. No, there's the other aspect also is that we would always traditionally look at age as you would assume that people would get married at a certain age, have kids at a certain age, and that's really changed. Right? Our milestones are no longer age based; they are depending on when we want to have kids, when we decide to get married. People are
get married
earlier.
or even have kids. Both
exactly. वो सब भी है ना. So what I constantly hear from people I talk to online in my audience is that I also want a solution that's catering to how my life is evolving.
Correct.
And how my milestones might be different. It's not age based for me. It is at different times, and I think for a lot of them, the mind space is almost like, is insurance going to be rigid for me, or is it going to evolve with my life? And they don't have. That's, I think, a question that comes up a lot.
So we've tried something to solve part of the problem. I'm not saying we've solved the problem fully. What we call a future proofing benefit, which is one of the options. So what happens is, again, to give flexibility to the person of how he wants or he or she wants to plan the life. The life cover increases when you get married. The life cover increases when you get your first kid. The life cover increases when you get your second kid. And then it doesn't matter, what is your age or whatever. So it's left, and again, you decide you had a plan in mind that you would have kids, and you decide you did not, or you did not plan to have kids, but you have kids. All kinds of things happen where the product can take care of.
Family, right? Well, now I'm coming to one of my favorite questions, okay? The Indian mindset, okay? Itna sara paisa hai, kuch mila hi nahi, okay? Basically that you pay for years, your insurance premium is going each and every year, going for years, and you get nothing back. How do you address this mindset? Okay, first, Abhijit, I'll come to you, Varun.
So honestly, it is for peace of mind. You are paying for peace of mind rather than anything else. Correct. So, obviously you would want to live longer, right? Why would you? That is not a scenario I would want any family to face. Essentially, it is only for exigencies, and that is something which, people have to appreciate. So what has happened is, in India, there is a variant in which you get term with return of premium, which is somewhere between the traditional life insurance policy and the pure term. That is also fairly popular in some of the segments, because for some people, they can't get over this mindset that I will not get back. So for those, we have a product in which we will return the premium if you survive the term.
What do you think? First, I want two things from you. Okay, first is, how do you relate to this yourself?
Yeah.
Okay, have you kind of changed your mindset towards that? And second is your audience. How do they relate to this?
The older you get, and I like the fact that you said that it is building towards that mindset, because till you actually need it, you will question it. Correct. But the day you need it, the first thing you will ask yourself, oh, thank God I got it. Like I've had scenarios where I'll be like, okay, maybe that renewal will come up and you'll talk about like, oh, I haven't used it, and I've had that, right?
Correct.
But the first time I ended up using insurance, I remember there was an incident where we had to like rush to hospital. Our daughter was like 9 months old, and at that point you're thinking about doctors, you think about everything else. And I was so happy I had insurance. Right? Similarly, when I've had like cases in the family, when I've had like a grandparent or an uncle, and I've seen that scenario where I've seen people in the family really turn around and say, okay, it's that moment you realize the value of it.
Correct.
But you're also building towards, okay, it's there. Correct. And that gives you a sense of security, which you don't think about till the first time you see someone actually using it.
So it works really well in health insurance. Yeah. Term life is a little bit different. Term life is like, boss, you need to die.
Yeah.
No one thinks about that.
Yeah.
Correct.
Right?
Correct.
But I'm saying conversations within families need to be around that. What if something happens to me? Therefore, what is the right amount of corpus? So I'm just, that is one conversation. And like our mindset from our times, like, was always that you're paying something, but you don't get anything back. Now you've got a product for that. I'm just, so have you ever considered insurance in that way? Or you as the new generation, or even your audience, is like, I'm cool with this. I'm not getting anything back, but it's something that I have to pay.
I remember my father had this chat with me. Like, my father had a lung transplant last year, and so he had this long chat with me, and he went through a long period of waiting for the lung. I think we had like a good 9 months of trying to figure out, how we would get a donor, and we had many conversations. And so we actually had that chat, and he was like, this is the insurance I've had, and this is what I've been paying for all these years, and this is what you're going to get, your sister's going to get, etc. And at that point, it became a real conversation, right? I think the problem is, for many of us, it's not a real conversation we kind of go through, but in moments like those, and thankfully he got the lung and he's fine and he's playing tennis now. But I think it just comes down to that point, is that you might believe you are saving, you are investing, you're doing all that for your children and for your family, but that is all, I call it a bonus. The bread and butter is what you know for sure you are leaving for your family. And that actually, I think last year really changed my mindset. And although like that is me changing my mindset in my early 40s, but once you face it in that lens, and you have that conversation as a family together, that's when it really becomes, I think it really sticks with you.
Yeah. Some takeaways for your kids also in the future,
Yeah.
I guess. Yeah.
They're too young though.
Abhijit, you're saying something?
So I was saying ki what happens in many cases is people will realize it when they see happening to friends' families, not your own, but friends or relatives, and then you realize that people who did not have protection, what challenges they went through, and people who had protection, things. Especially we've seen in home loan coverage that we offer, Credit Life product. There we've seen many examples like that. When the house is saved because the loan is taken care through the life insurance policy, the family is so much at peace of mind. So, it's difficult. I mean, you understand it. It's not that it is, cognitively not understandable, but you don't act upon it. It's a little hard to act. And that mindset, I think.
That's where I think that personal experience is so important. When you're buying a house,
Correct.
probably the biggest financial investment, I shouldn't say investment if it's for your end use, kharcha, let's say.
Correct.
And you're not considering the fact that if something were to happen to you, God forbid, that's a massive amount of money.
Absolutely.
And just an insurance product can take care of that.
Absolutely.
What are you saying?
And when you talk about that, I think what's also important to think about is that we also, while there is the longevity is increasing, you also have people who end up who die young. And that's very prevalent in today's time.
Yeah.
And so I feel that a lot of young people, and that's people from my audience, actually say that I'm also seeing people who are in their, let's say, late 30s, in their late 40s, who are passing away. And so they also now have that in the back of their heads because they're seeing that happen around them. So one is the long life conversation. The other is, okay, life is also getting short for many people, and you're still trying to figure out, is it lifestyle, is it many other things? And so you also want to plan for that contingency. Like you might have just I've seen scenarios where someone's just gotten married, decided to build a life, and a year later, one of them has passed away. And it becomes a real conversation after the emotional aspect, and obviously everything else goes by, is that, how are we managing, let's say, EMIs that we spoke of and everything else.
Let's shift to slightly more. Okay, I want to move to one topic which I've had a lot of feedback on, even on my own podcast. That's that insurance is very expensive.
Correct.
Okay. Each and every year, thankfully for me, as far as term life is concerned, that is not even not even a factor for me.
Correct.
Because when I took it, I'm paying the same amount.
Yeah.
Okay.
Correct.
But in general, people assume that insurance is expensive. Abhijit, I want to come to you and can you help us to demystify or bust that myth?
So term insurance is not expensive at all. I mean, let me be very honest. For a 1 crore cover, if you are a 30-year-old, correct, you will pay 13,000 rupees per year, correct? That is, not even 1 month's EMI for the motorcycle bike that you may be driving, correct? And you have cover for 30 years, you have to pay 13. So it's not expensive at all. It's question of, I think, realization that I need it more than anything else that is lacking. I don't think people are really, and now with GST gone, 18%, it's become even cheaper. I mean, earlier when we said 13,000, it was 13,000 plus 18%. Now it is 13,000 only.
Actually, I'm just breaking that down in my head. My mental math is very slow, but actually thankfully I had time to do it. So that basically comes down to what? 1,500 rupees a month?
Correct.
If you have to pay it.
Yes,
Which
yes.
is not even one evening out.
Yes,
Right? It's
yes.
For a
literally-
30-year-old,
Yeah. So you're basically
30-year-old.
covered by just one, not even a night, or one snack, or one quick commerce order you might do.
Do you think your audience relates to expenses in that way actually? Because I think that's very interesting. I haven't thought of it that way, but obviously I'm not in that age bracket also. I think in absolutes.
Yeah.
13K a month is it's not even a number. But your audience, let's say, who's at that age bracket and is earning and spending, you think that makes a difference?
I like to use the term. I feel that today's audience of, let's say, 25 plus to maybe 35, 40, thinks in cart size. Because everything for us is adding to cart, right? Look, so you're thinking of what is the average cart size I am comfortable with as a person to buy, and I think that's how they look at it. Because everything in our life is now based on how much you're adding to cart in a certain way. So I think if you break it down to that and how much you're paying for that one time, or is how they look at it. But I feel they should break it down basis this. I think it's that how does that really translate to per month is a far better way. But I think the mindset has become cart size.
Add to cart, huh?
Add to cart, yeah.
Do you think insurance will ever be sold as on quick commerce or something? I hope not, because that's like a contract.
I think we are still away from that. But no, so it at least makes it more relatable. I kind of agree with you. It's easy to make it relatable that way. And as I said, you can pay the premium monthly. There's no compulsion. So you can pay like 13,000 instead of paying once a year. You can pay it monthly. Those options are.
Those options are there. So you can make it as flexible as you want.
Absolutely.
You can actually include it in your financial planning.
Yes. That I need to pay 1,100 rupees or 1,000 rupees a month, and I will be taken care of.
Okay. That's actually a powerful way to frame it. I think that, it connects to a broader conversation about financial priorities. Varun, as someone who's built businesses, okay, and businesses have also evolved, you've also grown. How do you think insurance fits into evolving responsibilities, right? I'm sure you know about lifestyle inflation, right? That Americano, which was something, now is something else.
Yeah.
How does insurance fit in that for you?
So there are two parts of lifestyle, right? One part of lifestyle is what you are on a daily, what is like an impulse lifestyle element, and what is always there, and almost like that standardized part of your life, which you often don't think about. What I'm seeing more and more is that part you don't think about is something that we should think about as you start getting older, thinking about these things. I think that's really been the shift when you look at it. And I think that's where insurance really comes in, is that it's the things you don't think about, it's the contingencies can happen to you. And so you're not worried about, one second, do I have to move stuff around if this happens to me? And I think that also is coming with the general world around us today. If you're building a business, if you are in a career, if you're having a family, kids, you're thinking about, okay, things are changing. It's not just prices changing, it's how how the markets are, how disruptions happening because of technology kind of coming in. So keeping all of that in mind, I feel that it's really changed how people look at the stability part. I think the stuff which you would call, tradition would call boring, which is where I felt insurance would always get put into, is now becoming one thing, this is essential. So you're no longer calling it boring, calling it essential, and the other stuff is more impulse.
I mean, this increasing cover thing, that, I think it fits in well for
Absolutely.
that, right? Let's just go one level deeper into how it works.
So what you can do is you can choose that your cover will increase at a certain rate every year. So you start with, say, 1 crore cover, but 20 years later you will have a 1.5 crore or 2 crore cover. So it kind of, doesn't exactly mirror your rise in income, which could be faster, but it kind of compensates and you don't have to think about it again when you're doing your financial planning.
I'm assuming the premium also would increase.
No, the premium is same. The premium doesn't change. The
What, seriously?
Cover.
Wow.
So the premium, obviously the level cover premium is lower than the increasing cover premium.
Okay.
But you don't have to do any process again.
Okay.
You just pay one premium, which you have understood that instead of paying that, 13,000 example I gave, it could be a higher number. You pay that higher number, and then, you don't have to worry about it at all again.
Very interesting.
So that is very easy.
Which is, I think, a good thing, that because the worry a lot of people also have is, I have to keep thinking about all the things I have to pay for. Correct. And if you don't have to think about it, I feel that convenience, I call it convenience because it is convenience. Correct. Is that I think a modern consumer today really wants, is that I have so many things to take care of. This is one less thing to take care of, especially to remember that, okay, one second, this might vary, this might change. If it's going to stay the same, that's perfect.
So actually it frees up a lot of time for other things. Like, on a slightly different note, it is like Steve Jobs saying that I don't want to think about wardrobe. I will use that Ishimiyake t-shirt and jeans for all my public events. So my mind is free to, actually deliver the talk I want to do. Similarly, I have so many ambitions in life. If this is taken care of, I have time spent, I have time enough for other stuff in life.
Let's move to a really important part of the entire insurance process, which is claims. This is something that everybody gets nervous about. It's not a very comfortable period in your life. And for life insurance, obviously someone's passed away in the house and you have to go to a company and make a claim to get the amount back. How do you ensure this process is smooth?
So we've come a long way in that, the insurance industry as a whole. And I think the way to look at it is typical claim period, the payment period is now few days. It's not anything longer. Essentially, any claim where the document is available, the death certificate. And now we also take nominees, Aadhaar or whatever, or some ID proof, and pretty much the claims get paid. Regulatorily now, you can't deny any claim if the death happens after 3 years.
Oh, 3 years is the number. Okay.
And before that also, not many claims get rejected. Most insurance companies have 98, 99% claim settlement ratios.
Yeah.
So the only advice I will give you, don't hide your health. So main reason for claim rejection is you had some ailment, you had hospitalization, you have something or the other. If that is not hidden, your price may increase, but claim will not get rejected. So the key advice is when you are onboarding, we are getting onboarded, don't hide anything from the insurance company. If nothing is hidden, there is no way we can reject the claim.
Yeah. Varun, did you know that actually?
I feel that the transparency part of, because it's two ways, it's a two-way street, right? It's not about just what you get, it's about what you give as information as well. I think that's a mindset shift. I feel today's, young person is saying, I want to give you all my data.
Exactly, yeah.
But it also comes with like how you looked at things, right? I remember there was a point of time where people would say, no, but don't say you're a smoker. You'll have to, it'll work differently for you, right?
Yeah.
But I feel today they're like, no, take my information, so you have everything. And I honestly feel it's a lighter load on your own head. Now you've hidden something, you have that at the back of your head, and you're worried about how will that play out in the future. So I think that the fact that it's, he said is important because it's your responsibility too. It's not just taking the insurance, which is your responsibility. It's also giving all the information that is your responsibility. And so I think that's
it's a contract at the end of the day, and both parties on both sides need to be honest about that. Okay. So India's increasing life expectancy has been documented by the World Bank as risen from 60 years in 1994 to 71 years in 2019. Okay, so that's 11 years added, which means planning for retirement has never been more important, right? So this is why conserving your corpus by taking minimal risks becomes extremely important at this age. Corpus, lower risk. Before we wrap up, right, guys, I want to talk about legacy creation. Abhijit, you mentioned whole life cover as an option for legacy creation. How does that work?
So what happens is this is available in life pure term policies. It is available in savings products. It is more important in countries which have inheritance tax.
Okay.
In India, inheritance tax is not there, so the importance is a little less. But legacy planning is overall part of financial planning. What happens is you get covered till age 100 or death, whatever is there, and then the nominee will get the benefit of the policy. So you have whole life policies in term, or you have whole life policies in savings also. So entire corpus that got built, and it's mainly meant for savings if you ask me, the entire corpus that got built, you can pass on to whoever you want after your death.
Okay.
So it's been extremely important in geographies where inheritance tax is large. In India, it has not really picked up, but you never know.
Yeah. Varun, legacy creation and insurance. I know you're a bit young for that, but still there.
No, but I feel one of the areas where the most conversation is happening, and I don't think it's only, I think there are two categories of people talking about legacy in that sense. I'm seeing 30-year-olds today talking about this is how I want to be once I retire, once I get to that age of 60, 70. And I'm also seeing people who are 60 and 70 who are also talking about the fact that it's not only like, not a retired life, but I also, now this is the time for me to experience life and not have to worry about, this is what goes to my kids, or, this is what, they're like, no, I want to live, now I get to live my life. Like my mother retired and then she started something else because she's like, this is not post-retirement life, is I get to travel, I get to do something I'm passionate about. And I don't have to worry about, okay, this is, my kids have to take care of me, or I have to do this for my kids, because that stuff is planned for. And I think that last line is important. When that stuff is planned for is how you look at it, then you also get to experience life in a very different way. And the younger ones are saying, I want to emulate that by the time I get to 60, because their mindset is, if today life expectancy has gone to this level, when I'm that age, it will be further ahead. Like I want to live to I always joke that I want to live to 120. Just
why not?
Bolne mein kyun?
Why not?
Exactly.
120.
Right? Yeah.
Can say 105, 110, but let's go to 120.
No, and the interesting part is if you have lived till 60, then your life expectancy is actually 85 or 86. 71 is at birth.
Okay.
So these life expectancies that are given out by World Bank and all at birth, if you have already lived till age 60, you will live most likely another 25 years.
Oh.
And that will increase further. I mean, as time goes by.
The advantage of having statistics on your side. You've done all the calculations there and you know all that.
So 120 is doable.
120 is doable for me in that sense, yeah. No, but I've actually seen this. I've also seen this with, like my grandmother's 92 years old. I'm visiting her in a few weeks. And And I know for a fact that she's lived a certain lifestyle, but she also knows like I've talked to her. She's like, no, this is like taken care of. Like, no, and now she has great grandkids, and she's got that. She's all set in life, and I feel that once you also see that, and I think as a young person today is seeing more grandparents and even great grandparents, and so they also see, okay, one second, that's how they're in that age, and that's what they did. And that conversation also brings up points like, okay, they'll say, okay, I had this insurance, it's all set, I'm not worried about it. So I get to go on a holiday and use the money I have. And my kids are taken care of with the insurance I've taken.
Actually, today's generation can prepare for that. That is a possibility for them. And,
100%.
using insurance, that is something that they can do. Okay, we are wrapping up now. I want each of you to give our listeners one key takeaway. Varun, you go first.
I think the one key takeaway from me from this conversation, more than anything else, is the fact that how insurance today is flexible to evolve with how your life evolves, and it's not a rigid thing that people have tended to perceive it to be. That if my life stages or my milestones in life come at different points from the person next to me, insurance is evolving with that. I think that's the core. I mean, that's my biggest takeaway from this chat, is that I think that really is also changes people's perception of how you look at insurance.
Yeah, Abhijit, your key takeaway?
No, so I kind of like Varun's idea of, putting it as how much is it cost in terms of cart size planning.
Wonderful. Those are fantastic insights, both of you. For our listeners, I think the key message is that insurance doesn't have to be this static, boring financial obligation. It can be dynamic, it can grow with you, and it can actually enable the lifestyle you want rather than restricting it. The SBI Life term plans we discussed today offers that flexibility, whether you want steady coverage, growing coverage, or milestone-based coverage, plus with features like spouse continuation, emergency fund riders. It's designed for modern families with complex, evolving needs. As always, do your research, compare options, and choose what works for your specific situation. But hey, don't let perfect be the enemy of good. Having some insurance is infinitely better than having none. Thank you, Abhijit, and thank you, Varun, for sharing your insights today. And thank you, listeners, for tuning into the Liberating Mindset Podcast from SBI Life. Until next time, this is Anupam Gupta reminding you that with the right strategy, your financial journey can be both secure and fulfilling.